Bitcoin. Today, we're going to go into the micro data to see what's likely to occur in the next few days and weeks. Because right now, Bitcoin's in a very sensitive time. It's hitting really key resistance zones. And if we break through, it is going to really give a lot of confidence to the whole market. So you can anticipate not only your Bitcoin position, but the rest of the market. So if you like today's video, hit the like button, subscribe, hit the bell notification. We are going to use Elliott Wave and Fibonacci, which are some of the best high-level technical analysis to allow us to see what's likely to occur in the very near future. So if you haven't taken my free crypto trading masterclass, is in the link below, because one of the 3 secrets that I cover is Elliott Waves. If you don't know me by now, I'm Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading currencies for over 15 years, and I was featured in the best-selling book, High Probability Trading Strategies, back in 2008, just after I finished my math teaching career. So let's dive straight into Bitcoin. So there's a couple of things. We want to look at the macro picture, which is the high level, what's the biggest wave count. Then we're going to go into an intermediate, and then micro, and then maybe even a sub-micro, because the sub-micro will tell us what's likely to occur in the next days and weeks. The macro is more about months and sometimes even years. So let's just look at the macro. So the macro picture is we are on a wave. What we're on, I'm gonna say we're on to really. We're not about forecasting and projecting for the sake of forecasting. What we're aiming to do is have an opinion of the market based on Elliott Wave and Fibonacci levels, what the chart is telling us, what's the price action telling us, and then base our decisions on that. So the opinion that I have of the market right now on the macro is that we're on a wave 4. We're on a wave 4 within the degree that I'm looking at. So what does that mean? So a wave 4 down here is what we're anticipating. So what's the intermediate? Well, the intermediate, when we go from a wave 4, is typically we expect 3 waves in any correction, and wave 4 is a corrective part of an Elliott wave channel. So here, the intermediate is we're saying A, B, C, and we have just finished this A, and we're saying that this looks like a nice low of the A. It's looking more and more confident as we're making new highs in this region over here, but we are now on the intermediate count. We're on a wave B, right? A wave B. Hopefully that makes sense. Intermediate, we're on a wave B. And then on a micro, we are, if we now break down this wave B, we're expecting an A, B, C of a B. So on the micro count, we're on this wave A of this wave B. And then on a sub-micro, hopefully you're with me on this, we're on this, look what looks like an initial wave 1, a wave 2, and potentially a wave 1 of a wave 3, of a wave A, of a wave B, of a wave 4. Okay, that was a mouthful, right? So to keep it really, really simple, if you're not familiar with Elliott waves and this labeling, what we're effectively saying is that we look like we are potentially on, let's just do the 3 wave counts. So the biggest wave count is a wave 4 that goes at the end. And then before that, we're saying we look like we're now on a wave B of a wave 4. And then before that is a wave A of a wave B of a wave 4. And now before that, it looks like we are on a wave 1, 2, 3 of a wave A of a wave B of a wave 4. And then we're putting a W at the front. Now, if you're not familiar with this, that might just look like jargon to you. But what we're basically saying is, oh, I need a colon over here. And the reason I'm showing you this is sometimes I'm just going to use the notation, so it would be good for you to know what I'm going on about. So this wave 4, this 4 is this 4, right? So you get that, that's the macro count, right? And that's why it goes at the end. Second is this wave B, which is this wave B, it's the intermediate count. Third is this wave 3, and we're saying we're on a 1, 2, and then on this 3 of this wave A, so we're referring to this wave over here. I don't think I can make it much clearer than that. I thought that was pretty clear. Oh, I missed out the A, didn't I? Apologies. So this wave A is referring to, if I just get this right, because this is important. It's not referring to this wave A. It's actually referring to this initial wave A here. This A, we're saying this looks like an A, B, C. So there's this A over here. So I'm going to focus on this wave. And then the last one is this 3 is this 1, 2, 3. So this gives us a really strong opinion of the market, right? We're not fixed in that opinion because as the market gives us more information, we can mold, but this is what I want to focus on today. So let's just delete these now. This is high level, by the way. This is what you just learned there. Most people have no idea about, no idea. So the couple of things that I want to make clear as well is there's this red line over here. You see this red line, right? You might be wondering, what is this red line and what is this red line down here? Well, if we just zoom out a little bit, previously we said this looks like a wave 3, a wave 4, and then a wave 5. These are really important zones, and a wave 4 typically corrects in this zone here. So this red line is an important resistance zone here. We want to be aware of that. When we break through that, that's going to be a big deal, and we want to stay above this particular one, and then we'll see that data when we get closer to the wave C low over here. So let's stay zoned in, because the main piece of information I want to bring you is on this data, right? This data. I'm gonna stick with the daily chart. Right, I want to just zoom in over here. I'm going to zoom in just so we can have a nice clear picture. Let's move this A up so it keeps in the screenshot. Let's move this 5 up as well. And let's just zoom in like this. Right, and that will do. That will do. Fabulous. So a couple of things we want to take into account. First of all, the daily momentum indicator, the stochastics RSI. If you notice that the highs over here, this wave, mini wave 4 high, and the momentum marry up nicely, right? And that gives us important information. This one also marries up nicely. This one also, not so much as the rest of them, but when it goes bearish, where the blue line goes below, and it hasn't done it yet, but the blue line goes below the red line, we should expect sideways to down. But what we're now going to focus on is this part. I'm just going to get rid of this line for a second, right? So let's just do a quick count on the microwave so we can really get clear on what we should anticipate for the next few days. So this initial move up looks like a nice wave 1. I'm going to make the size, just put it on 16. I'll change the color as well so it's clear. I will keep it on orange. Right, wave 1. Yeah, so it sometimes doesn't let me go right to the point that I want to. Wave 1. And then we're going to go wave 2. Yeah. And now, and again, it did a nice A, B, C correction, textbook stuff. So, you know, even if we did some retracements, we'll see that it's probably bang on one of the key retracement levels. And this is 38.2. So it's not a big correction. It's 38.2. That shows signs of strength. And then we've had this next move up. Is this a wave 3 or is this a wave 1 of a 3? So my opinion is that it's going to be a wave 1 of a wave 3 because it hasn't reached the extended price targets that we're anticipating. Yeah, so let's have a look. Well, actually, let's just do a quick fresh extension because we're using closing day data. This is a bit more accurate. We expect a wave 3 to get to a minimum of 1.618. And then overextended is, or extension is 2.618. So it hasn't reached this key number yet. So my opinion right now is over here is going to be a wave 1 of a wave 3. Right, and we'll keep it. So it's saying that this is going to look like a wave 3 in itself, but a wave 1 of a wave 3. And now what should we anticipate on this side? Are we going to exceed this part here? So I'm gonna jump into a daily, an hourly chart because the wave counts are not that clear on this because it's daily data. So let's just jump onto an hourly chart and let's just zoom out like this. Let me get rid of these because this is a bit of noise. We'll get rid of these for now. So what I wanted to show you here is this is what we're referring to as a wave 1, 1, 2, 3, 4, 5 of a 1, what ABC of what looks like a 2, if I can grab that down here, 2, and now we look like we've made this potential wave 1 of a wave 3, 1, 2, 3, 4, 5 of a 1, and then we should anticipate a correction. Now this is slightly higher, so it's probably going to be up here, right? So because the daily momentum looks like it's going to go bearish, what should we anticipate next? So let's just focus on this part of the chart here. because the reason I'm going into the detail is sometimes we want to look at the macro picture, and we don't need to really look into what's happening day to day. But right now is a really key time for the whole market, especially Bitcoin, because it acts as an indicator for the rest of the market. So if we just treat this as a wave one, I'm just going to drag this across. What should we anticipate? We should anticipate a minimum of 50%, 62%, and a maximum of 78.6%. We should anticipate a minimum of 3 waves. If this is the high, it'll be something like this, an A, B, C. Let's just draw these waves in. And again, I'm not forecasting for the sake of forecasting or projecting for the sake of projecting. It's actually, these are going to be potential good buying opportunities, but also how it's going to impact the rest of the market, because we're still in this very sensitive zone right now. We're below that red line of that previous wave 3 high. We haven't, hit the typical wave 3 1.618 yet. So this is a really important time for us. And then just a typical time retracement, which is this low. I'm going to count it as this low to this high. And normally a wave 2, even if it is a wave 2 of a wave 3, is 50%. So we can expect sideways to down until the 17th at 11 a.m. Yeah, minimum of 17th of 11 a.m., which is tomorrow. Today's video is I'm recording this at 8:30 a.m. on the 16th of June. So we want to just be prepared for that time frame, right? And if we do get 3 legs down, then we should expect a wave 3 of a wave 3, which tends to be the most aggressive and the most bullish out of all the waves. And we'll probably see a price action that does something like one of 2 things. Either it's going to shoot to this point here, or it will just shoot past it and go to the next target point, which it's this point here, but more than likely we're probably going to shoot to this point here. But even if we measure this at the time, nearer the time, we'll get some clearer projections. We're probably going to just blast through it, right? So there you have it, an update on Bitcoin, really sensitive time. So the date, we're going to focus on the date today, right? Date, because we did time analysis. So we should expect sideways to down until the 17th of June, which is only just over 24 hours. What's one of the main reasons? Well, pattern, yes, 1, 2, and then a 1 over 3, and we should anticipate a 2. But look at the daily momentum indicator, which tends to marry up nicely with some of these highs, especially these highs and these highs over here. So there you have it. Bitcoin, sideways to down for maybe 24 to 48 hours, give or take. But as the market unfolds, we'll keep up to date with this. And then there might be some great buying opportunities on the long side, because the weekly momentum is now up as well. But then that also gives us an indication of what we should anticipate for the rest of the market. So if you like today's video, hit the like button, subscribe, hit the bell notification. Today's quote is from a gentleman called Roy W. Longstreet, old school guy. This is an old school guy. He said, it's not too difficult making money in trading. The problem is to keep it. Most people give money back to the markets, and we don't want to do that. Like, subscribe, hit the bell notification, share this video, and take my free crypto trading masterclass. I'll see you very soon.